You want a cookie?
It's a drone.
I know.
Find your phone easily with the Xfinity voice remote. One more way Comcast is working to fit into your life, not the other way around. You.
Welcome back. Crude oil continues rising up another 0.25% this morning. U.S. oil futures trading above $72 a barrel now, hitting the highest level in 3.5 years. Investors fearing that the U.S. could impose new sanctions on key oil exporter Venezuela following its election Sunday that Vice President Mike Pence has called a sham. Joining us right now is the publisher of the Schork Report, Stephen Schork. Stephen, good to see you. Thanks so much for joining us. Your thoughts on this, if we were to see new sanctions against Venezuela, your thoughts on how high oil could go?
Well, oil could certainly go upwards of, and we know the economy can afford oil at another $8 a barrel higher, so pushing WTI close to $80 a barrel. I'm skeptical we'll see that, but certainly is a possibility. Certainly if this administration takes the step of banning the oil trade with Venezuela. Now, this would put 5 companies here in the United States in a very interesting position. Of course, we have Citgo, which is wholly owned by the state of Venezuela, but we also have PBF, Chevron, ConocoPhillips, and Valero, all of which in total import about 785 million barrels of oil. 785,000 barrels a day of oil from Venezuela. So this certainly is supportive of price. But I also, Maria, I want to keep in mind that the oil that we do import from Venezuela is a heavy sour oil. That has no relation to the NYMEX contract, which is West Texas Intermediate oil. So it's a completely different type of oil. So this would have no impact on the supply delivery mechanism of the underlying futures contract. But certainly from a political perspective, it certainly is supportive of price.
John.
Stephen, I want to ask you about a gap that's showing up in oil prices right now. You know, we see Brent prices quoted close to $80 or more these days, but yeah, West Texas is in the low 70s. Why is there such a big gap in U.S. oil prices and then some of these internationally traded prices like Brent right now?
Sure, because here in the United States, we have too much oil and we don't have the capacity to get it to where it needs to be. For instance, in the Eagle Ford and the Permian Basin in West Texas, when we look at those price differentials to the price in Oklahoma, which is where you make and take delivery at the Cushing Hub, or to the price in Houston, the refinery epicenter, and also the export market for oil, those price differentials with West Texas oil trading at a steep discount, last week $12 below the price of WTI. This is because we don't have enough pipelines. So we're producing a lot of oil, but we can't get the oil to where it needs to be, and hence this is keeping the price of WTI relatively lower as opposed to Brent. Keep in mind, we were all talking about these high quote-unquote oil prices, but demand for gasoline has never been stronger, and at this time of the year, demand for crude oil has never been stronger. The Brent market, which is more of a factor based on geopolitics, i.e. what's going on in the Middle East, is reflective. So it's the glut of oil here in the United States, it's the geopolitical risk outside of the United States, hence why that gap is wide and why it is growing.
Go back to your original comments to Maria about what the economy can, to use your term, Stephen, handle. Yeah. So it's 72 for West Texas crude. So it's 80. Can you expand on that a little bit about where it becomes a problem for the economy?
Sure, $80 barrel, so about $8 higher is going to translate into about another 16 to 20 cents a gallon at the pump. That's going to get the national average up into about the mid-3s, so $4 for you up there in New York, $4 for me here in Philadelphia, maybe $3.25 down in Birmingham, Alabama. But what we know in the past, that the consumer begins to really alter the behavior when that price approaches $3.50, $3.60. That's when the demand falls off. But anything in between here and upwards, the economy in the past has demonstrated its ability to absorb these prices. So I would say there is another $8. Now, of course, the big difference between now and 10 years ago when we last saw these prices at the pump was we're driving a lot more hybrids on the road, a lot more electric vehicles and so forth. So our demand elasticities have completely changed. So perhaps we can absorb even a little higher prices, but certainly we get to $80, the economy is going to approach that danger zone.
Interesting. All right. We will leave it there. Stephen, good to see you.
Great. Thanks
Maria. So much. Stephen Schork joining us there. Coming up, a shift in strategy for Best Buy, the new subscription service, keeping the company's Geek Squad at your fingertips. That's coming up. And then a super